Hello. If you'd followed me for any amount of time, you know that my website has typically been a hot mess and a 1980s retro disaster. Well, as you can see, I have drastically upgraded it, and it now actually is useful. And that is going to be part of today's discussion. In my last video, I talked about how I depended too much on one particular combination of indicators, and I set out to build a recipe specifically that did not use my favorite combination. I built an RSI stochastic combination that worked extremely well. And you can see through scrolling down on the right hand side, you will find where I have done analysis of the indicators that I have built. Now this list is ever growing, and this is part of today's discussion, because as well as the RSI stochastic, I have gone and built my favorite combination. That is actually what this video is going to be about, is my favorite combination. Momentum, MACD, Bollinger Bands, coupled with a DCA. But you can compare any and all combinations that I have up to date and see how they compare against each other. So take a few moments to visit the website and you will see real numbers. No hype, no gimmicks, no garbage. So let's get started with really getting into what makes momentum, MACD, and Bollinger Bands the ultimate indicator. So here we have the first analysis of band on Binance. Now you'll see that I've taken in 4 trades so far. You see the time and you see the prices. And a nice fancy little chart that demonstrates exactly when those points took place. Now this chart is using what's called a zero balance theory. This is an accumulation strategy. And if you followed my Patreon, you'll know that I don't like drawdown because it's a lie. This chart shows you the truth. It shows you exposure. And right now, I have roughly $5 of exposure in this asset. I've not taken any profits yet. Everything's just been 4 positions purchased. Now the rules I use, if it's under $10, I just purchase the asset at face value. If it's over $10, I purchase only $10 of the asset. Simple rules, easy to follow. It keeps the math clean. Okay, so now that we see this, let's go to the next chart. And you see here, this particular asset, BAT USDT. The chart is blank because it's only made 1 purchase. Not all that thrilling. But here, on FTX, Bitcoin Cash, now we're starting to see some real good stuff. Profits. Same thing. Same thing. Momentum, MACD, Bollinger's DCA. I made a purchase on the 4th. I sold it on the 5th for 1.03%. The price was 122 at selling. And you can see real world profits, real situations. You can see My maximum exposure was $10, and then here I made a profit. That is my profit for a $10 exposure, or my 1%. Yes, that's not very much for the first position. This is accumulation, slow, steady, consistency. This isn't gambling. This isn't fly-by-night tactics. This is real trading that does proper analysis. Now you see on the second purchase, I bought twice on the 5th, and then I sold it again on the 5th. So I actually did quite a bit of trading on the 5th. It was a good day. But you see my maximum exposure was $20. And that brought me in 20 cents. Again, nothing over the top, nothing insane, but realistic and reasonable. This is the point of accumulation when done properly. There is a price to pay for not taking losses. That price is exposure. So if you followed the information I put out regarding drawdown, you begin to see the differences and the truth. Worst case planning is what you are looking at right here. My worst case planning would have been a maximum loss of $20. And so far I have 5 trades in this asset. So let's move on to the next one. This is only a purchase so far, no selling. And you see right now, because it's above $10 to the price line, I have $40 in exposure at this moment. So $40 exposure right now. If something goes horribly wrong with this coin, I'm out $40. If it goes horribly right, meaning it just turns around and shoots up, I gain 40 cents. It doesn't sound very appealing, of course, because you're risking $40 to make 40 cents. But you're not losing any money. So your trade-off is exposure to profit. Now here we have another example where I've made one transaction already for Bitcoin, and then I've started to accumulate. And you see right now my accumulations exposure is currently $60. Real numbers. Numbers you can actually look at, test, evaluate. If this turns around and goes directly into profit above my average, I will gain 60 cents. Pretty simple. Here we have FTT on FTX. 3 trades, 2 positions, or $20 exposure for a 20-cent profit. This one's a little slower, Matic. And it just did 1 trade, 1 sell, 1% profit. So I made 10 cents on this. And you can see at the bottom of the timeline, not really that much time in this particular asset. Now this one's been kind of busy. I made 2 profits already, and I'm well on my way to a 3rd holding. Currently I am at $1.3 exposure. This one's not going anywhere fast. theta has been rather slow on FTX. Uni. This coin has a jaded history for most, but for this recipe, it's a profitable history. So, $6, 6 cents profit right now at the last trade, and waiting for the next opportunity. And as you can see, not very long in my trades. Okay, XRP, the coin that can be difficult to work with the wrong approach, or if you're too aggressive, it can take on too much accumulation. But for a well-balanced approach like this one, it does well. And it does well in a fairly good way. Every asset can be a huge accumulation in the right market system. And XRP does have a history of that situation. But right now, its market is pretty stable, and it's really doing very well. Ave. Not that fast of a coin, which is fine because it's not that strong of a market cap compared to Bitcoin. It's a good coin to trade with the right recipe, though. And as you can see, I've already made a reasonably good profit with it. So 1% of a $10 or 10 cents. That's respectable. Now we get to a coin that has some history. This coin does well. Its market cap is not that great, but in terms of what this particular recipe does, Momentum MACD Bollingers, this coin is just wonderful. It's a higher risk coin, so you do need to be aware of the risks of something going wrong, but it just does absolutely phenomenal for profits. This is the kind of coin that is, you just want it to continue, because this is a slow, steady, constant stream of money coming into your account from its profits. And as you can see from the chart, exposure is not that bad, and you can extrapolate this by multiplying it by 10 or 100 or whatever to whatever budget you want to use. I only wanted very limited amounts for my testing and analysis to give myself a baseline of just how this asset would look. And this asset looks really nice. You can see by the peaks above zero, profitability is a very good potential for this coin for long term. And this is why I really like the zero balance approach for charting, because I can clearly see with a definitive viewpoint exposure versus profitability. Now, you should not trade this coin on just this chart. This chart is misleading in that it doesn't really show you the risks of the coin because of its market cap value. What you should do is take this information and then do research on your own to determine if your risks fit well with this type of an asset, because this asset does have a higher risk quality to it. So you need to focus on what that really means. Now the price action is fairly small. So if you're going to make any real meaningful profits out of it, you're going to need to have higher exposure. Not just one single position like what I'm doing here, but at least 10 or 20 at a time to see the difference in the profitability. So that is a situation you need to be aware of with any of these charts. Don't trade them just because of what these charts show. Take this information and then evaluate this asset based upon your personal risk assessment and your financial situation. That is the best way to use this information. But now let's move on to ADS. Not much here, a quiet coin, and so far no traffic. But it's going to be interesting to see if it actually does well. Okay, ADX is only in a purchase state right now. Nothing really great about it. Kind of a slow coin at this point, to be honest. But we'll see. It might turn around to be quite something else. And IOS. It is a heavy accumulation coin, which means it has a huge amount of risk to it. Its market cap isn't that strong compared to other assets in the market, but it can bring in some pretty good profits. Again, understand your risks and extrapolate based upon what you see. If you use a $10 position size, you're going to have a $12 exposure level for this asset, or more. It might be $120. I think I screwed the math up there. Yeah, it will be $120 exposure with a $10 position size. So make sure you understand what that means. Worst case scenario for this coin is 100 positions, which means, given its current price point, worst case accumulation is $1,200. That could be very problematic. But the profits could be quite generous as well, if and only if this asset fits well within your risk assessment and budget. Okay, let's get back to our coins. Okay, let's see. Okay, that's the end of the coins that we're working with. So now let's get to the chart and see just what really makes this approach so wonderful. Now that we have the chart up and you can see just how this actually works. You see the MACD, you see the Bollingers, the momentum, and then the analyzer. So let's bring up the strategy tester. And you'll see that right now with Matic, it only made one trade. And it was 100% successful. Not very much, but that's still a good day. Let's expand this up a little bit. And you'll see with Matic that it made only one position. So it's pretty much a one-hit wonder with this particular coin. Again, not bad. Fairly reasonable, fairly consistent, and it just does a good job. So let's see if we can find a coin that has a lot more fun to it. Okay, let's see. Maybe we'll get lucky and this one will load. Okay, 8 trades, 100% profitability. I don't necessarily believe that, but what can I say? So let's see how this looks. we are. TradingView's new updated engines to display everything out. It's not bad. It's simple. It's complete. It does a good job. Profit factor of 19. That's good. Let's see what else this thing has to say. Well, it did better than buy and hold. Buy and hold is minus $4,000. It made 62 cents profit. Excuse me, average drawdown. It made a profit of $1.22. Now you can see here, drawdown is only 62 cents. That's not correct. As you already know, that's just wrong from the charts we just looked at. That's very misleading about your risks. But still, it beat buy and hold quite significantly. So that's not bad. That's simple. Now you paid 42 cents in commission. I set this up with KuCoin's commission. Simple enough. And we see all of the gory details. And let's see, we even see some of the more useless statistics as well. Largest losing trade, none. I like to see that. No margin calls, but if you run this on a futures account, you do need to be careful with margin and leverage. Plan for the worst case scenario, always. Okay, you get your Sharpe ratio and your Sorrentino ratios. Personally, I find them useless, as they're nothing more than fancy numbers used by investment firms to try to con you out of your money. For me, the proof is in the fact that I can backtest this, see it, and actually find out what it's going to do with real market conditions. And of course, you can even see the actual trades, real trades, with the last position still being open and still at a loss if you were to take it at a loss. So for those that like to follow TradingView's numbers, all of the information here. Of course, anything you need to know for the range that was analyzed. But this is what I care about right here. The profit and equity curve. And of course, the buy and hold, if you care about that. I don't. This is what I care about. Simple, efficient, consistent. Now let's get into the numbers. What makes this so special? Well, what makes it so special is, first of all, momentum. Lets you avoid the bear market drops while you are still looking for opportunities. Let's see how that looks. Here we are. You see the big bull runs. Let's see if I can find my mouse here. And you see we completely missed this whole drop altogether. Now we're on the 15-second time frame, which is not all that impressive. But if we go to the 5-minute time frame, you can see more bearish, bullish activity. And you see that I'm using a split channel momentum. The red line is the high, the green line is the low. That's what really makes this combination stand out, is its flexibility. You can use a single line based upon the close or split channel. If you change the duration of your momentum, for example, I'm using, I believe, 197. If you were to set it to, say, 432, you're going to give yourself a longer range, which is going to make this recipe more conservative. If you set it to, say, 55, you're going to make it more aggressive, but still look for bullish and bearish opportunities within that time frame. So you have a wonderful effect of being able to actually change your aggression. Now that we see a simple momentum, let's make a change. Okay, let's come down here. We have the fast and slow lines at 197, prime numbers, but let's do a complex momentum. That is, let's make the fast line and slow line different. And let's see what that looks like. And there you have it, a fast and slow momentum, or a complex momentum, more accurately stated. So such a simple change, and we have an entirely different result. So, and yet also look at the net profits. So you see, with just momentum alone, we haven't even gotten into some of the other areas, just momentum. Just a simple change has had a huge impact on profitability. We now have the last profit of 4% with an average profit of 2%. We're only looking for a 1% profit, and yet this yielded an average of 2%. One change is all we made. One very simple change. So now let's look at Bollinger Bands. Volatility. This is what our goal is here, to be able to find volatility within the chart. Now, will every change be better? No. Some changes are going to be better, some changes are going to be worse. But that is the point of what this recipe can do. You can tune it extensively to what you are looking for. Okay, let's take a look at its settings. Pretty straight, simple, moving average, and a standard 20 period lookup. Nothing over the top there. Looking for deviations of 4. So it's pretty extreme on the aggressive level, and only trapping strictly the entries that have the highest level of deviation are the most likely to show extreme volatility within the market. So now we have momentum and extreme volatility. And if we make simple changes here, like to the lookout back period, we're going to affect this even more. So let's take our look back period and let's make it 13. Now I'm going to do the same thing with the lower boundary because I want my Bollingers to be uniform. But you don't have to. Again, another wonderful feature with this algorithm. You actually don't have to have uniformity. And let's, instead of a simple moving average, let's go to a volume weighted moving average. I have no idea what this is going to do, which is the beauty of it. I really don't know. So there we are. Volume weighted moving average with changing the look back period. Now let's see how it affects our strategy. And we're now down to simply one trade. So we become more conservative. Isn't that interesting? We made the Bollinger's band more aggressive, and yet we're more conservative. Let's see if we can tweak this a little more. Let's try an EMA. Okay, there we go. And let's drop this down to the standard of 2. There we go. Let's see how it affects our trades. Now we're up to 7 trades. So you can see just how little changes can have a huge impact in what you're doing. That was the Bollinger's band. So now we're not going after the extreme volatility that the 4th deviation gave us. The standard 2 deviation gives us a little bit more. But we're up to 5 trades and a 1.7% average profit from the analysis. Okay, so now we have Bollinger's, we have the moving averages. Now we bring in the other element. Now we bring in the MACD. And here we have our standard MACD. Now let's see how it's set up. Okay, it's set up pretty reasonable. Now, what if we want to make this more aggressive? We can. For example, let's take our fast line down to 7. Let's take our slow line to 13, and let's take our smoothing to 5. And you see our profits went to 1.8. That's not bad. Actually, take that back. It recalculated it at an average of 3.4%. That is really good. 17 trades, 3.4% average profit. And so far for this analysis, it's only had a maximum of 3 purchases per trade cycle. This is why I absolutely love this combination. There are just so many unique opportunities this combination can give you with a little bit of time and some very simple changes. And you don't even have to change everything. Just changing one number can have such a huge impact and bring this whole strategy together nicely. So let's see what this looks like on the 15-second time frame, the one I typically trade on lately. Okay, TradingView timed out, so we have to do it again. Okay, let's see how it looks in the analyzer. 32 trades, $5 profit. According to TradingView, 32 trades. That is spectacular on this coin, especially considering we're only purchasing the asset at face value. We're not purchasing a large amount of this. Now, for the TradingView analyzer, it is set to trade $11, and its fees are set for a KuCoin. This is really good, but it gives you an idea based upon what this says and what the charts from the website say, whether or not this is something you want to paper trade. And this particular recipe is really just a good recipe. It does well. And this is why it's one of my favorites. It just really does well. Even on the 15-second time frame, 13 trades. Average profit of 1.8% per trade. 13% profit for a 15-second time frame, or roughly 5 days worth of trading. So had you been trading this recipe on this coin for the last 5 days, your account would have an additional 13% profit based upon your position size. Numbers you can check, verify, test, and evaluate, specific to your own personal situation. So let's see what other coins would bring in for top of the line trading. Okay, here is ADA. 3 trade cycles, not bad. Let's go to the 1 minute though, since that's where most people are going to want to stay. Very few people actually want to get into the insanity of 15 seconds. And 1 minute is pretty good risk as it is. So for 19 days, 10 trade cycles, 1.1%, basically 10% for ADA. And ADA's been known to be a very sluggish coin at times. So this is good. This is real good. Let's see what the profit looks like. So there we are. TradingView's numbers for those that like to view them. Okay, ADS, one of the ones on the website. Let's see how much different it is with the changes I made for the sample. "29 trades. That's not bad. 14 completed trade cycles according to the algorithm on the screen. That's not bad. That's good. And the results are pretty consistent. So as you can see, momentum the ability, either through a simple or complex, to be able to track the market in a bullish or bearish state and to capitalize on market leveling or plateaus really is able to help limit your risks drastically. And it is one of the best beginning points of any strategy. Here we have this asset, 67 closed trades. Now remember, exposure and reward are based upon your position size. My position size is extremely small for testing, but once you're happy with the results and you've planned out your worst case situation, for example, if I wanted to go with a 10 and go with, say, $16, this could potentially be as much as $700 in profits. That's a lot. Will it make that? I don't know. Potentially it could. So understand your risks. Simple changes is all you need with this powerful indicator in combination. As you can see, even coins that have very weak market caps compared to Bitcoin and Ethereum can do very well with this approach. Bollinger Bands capitalizes on volatility. The higher the band deviation, the more specific you hunt for extreme volatility changes within the market. The more conservative it becomes, but the better your opportunities. MACD, convergence, divergence. That cannot be understated enough in terms of just how well it hones in the market for really good trades. Holy cow, look at this. 190 closed trades by TradingView's analysis. Now this is a weaker market cap coin. It has a much more aggressive market cycle, and it is a much more significant risk compared to other coins. But look at the profit level for what I am actually trading. That is just amazing. But this is a good coin. Pay attention to your maximum buys per cycle. The maximum per cycle for this coin for the last 28 days was 60. So if you're using $1 as your position size, that means this asset would have cost an exposure of $60. That could mean a lot if you're using larger sizes. If you're using $10 position sizes, this asset would have had a maximum exposure of $600. So make sure you clearly understand your risk and your worst case potential. Risk versus reward, and this asset may not be worth the risk for a large position size. But this is still phenomenal. And all because of a few simple changes. We saw what this asset was within the analysis I presented before. And just a few changes we made, look how drastically this analysis changed. This is quite stunning, to be honest. 147 trades, $27 on a coin I've never heard of. But still, this would make me pay attention. Would I trade it based upon this? Absolutely not. Not one single penny. Until I am sure, beyond a reasonable doubt, that this is the kind of market I want to get into. But this analysis really tells me this particular coin has good potential. This coin by itself, really, with a position size of $10, would easily pay for my entire month for my VPS with profit left over for just this one coin with this recipe. So this is definitely something that I would definitely think about for trading and really evaluate its risks. So the convergence, divergence that MACD provides is invaluable. And here's an example of a coin that just doesn't have anything with trading right now. Not a good market. So understanding MACD is really powerful. Your convergence, divergence within the market, looking at the delta or signal line are really good, powerful indicators. Let's go to everybody's favorite. As soon as I find it. There we go. Bitcoin. The coin of the hour at the moment. People love to trade it. And, well, it definitely sees why. This coin has had a really wild history, going from a high of 67,000 down to 18,000 just within the last 9 months. And yet, let's actually go up into its history and see how well this strategy would have performed with that wicked bear market we just went through. It still came out well. But let's take it one more. Let's really get an idea of what we're looking at. And there we are. Even with the insane bear market that we've had. Let's zoom this out. We'll get rid of this. And you can see right in here, all of these drops completely missed, and then only when opportunities showed up did it actually make the purchase. Like right here, it made a purchase, and then it didn't make another purchase till all the way down here. But then it made a very sweet sell. So now you see the November 15th start of the bear market. Here we have another huge run of a drop. Quite a bit drop right there. Completely stayed out of the market. It didn't get back into the market. Come on, where's my mouse? It got in here. Sold, got back in, and made another profitable sell. Missed all of this mess. This really is why I absolutely love this combination. Because it just completely skips all of the mess. It just stays out of it. It's wonderful for that. Here we go from April. 47,000 down to 27,000. Not one single purchase. Stayed out of it completely. And as you can see back here, it made a profit right before the whole market did a complete spiral downward again. More opportunities when they come up. Now we get back to the actual point of when the bear market started. And you can see right before everything just started going downward. It sold off for a profit, and then it just stayed out of it completely. Now, of course, lower time frames would have had opportunities it would have taken advantage of. But you can see here, it got in and it got out with a clean profit for its opportunity. Now, is this the perfect be-all and end-all to every strategy out there? No, it's not, and no strategy ever is. But this particular combination is tunable enough that anybody with very little trading knowledge can be successful. And that is why it is one of my favorites. You don't need to be an expert to have this winner of a combination make you money. It's consistent. It's well thought out. It's put together well. And the combination just works exceptional in a wide range of market conditions. Coins that have, or I should say assets that have high market cap or low market cap can perform equally well with this wonderful approach. And this is why I like it. Even if you want to trade extremes. And I don't recommend trading the 15-second time frame unless you have a very thorough understanding of exactly what you are trading. This is extremely aggressive. You need to understand what that aggression means. In this particular case, this would be $180 exposure right now as my maximum risk for Bitcoin given the current market conditions. That can be a lot. Worst case scenario for the way this is set up would easily be $1,000. That is not a nice place to be if the market goes just completely bad and you're not aware of your situations. Trading coins like Bitcoin can be high risk on smaller time frames. The rewards are equally just as high. But you need to understand those risks. So let's see what the strategy tester says. 6 trades is what the strategy tester says. Not very impressive, but that's because it's doing its job. It's not taking on unnecessary risk. MACD, convergence divergence. Wonderful way to filter out unnecessary risk. Momentum, wonderful way to figure out whether or not the market has plateaued. Bollingers, really one of the best volatility indicators on the market. Putting the 3 together and you have a winning approach. So, check it out, try it out in paper trading. Let me know what you think. What is your favorite combination of indicators? Leave a comment below. Tell me. Until next time.